will be recorded and be put up on our website and our YouTube channel later on. Secondly, off to the right-hand side of your screen, you can see that how participants can get involved. This week, what we'll do is we'll because there's only one of us, we'll unmute. And if you want to jump in and ask a question, it'll make it a little easier for myself so that I can hear those questions. How we're going to run today's news or today's coffee chat, because there isn't much new news that's come out. I was really hoping the government would come out with the actual legislation on the commercial rent subsidy, but it's still, I guess, in the works. We're going to go through kind of a lessons learned over the last 8 weeks about the programs, and then really open it up for some in-depth questions around the programs or any kind of pain points you have, and sort of end it with where we think things will go over the next month or so as the economy starts to open up. So today I prepared a little bit of a presentation, and I'm going to share that with you. It's going to have a few talking points on it. So what I'll do is I have to admit some more people. Okay, so we're going to go through this presentation. It won't take long. I'll ask questions after each of the three main subheadings. The first thing we'll be talking about today. What we'll be talking about today is the personal comments around COVID-19. Then we'll talk around corporate issues around COVID-19 and the programs available, and then what we see as business continuity and the way forward during the next 4 to 8 weeks as the economy gets going. On each one of these points, we'll talk about lessons learned, and we'll open up for discussions after each bullet. Okay, so moving on. The personal programs that have come out there've been many, and in fact, I believe that the government has been somewhat surprised with the uptake on some of these programs. So I want to briefly go over what we've learned and how we've helped our clients with these personal programs over the last call it 8 weeks. The CERB, probably the mainstay or the prized sort of program that the federal government has come out with. We've seen it being rolled out fairly straightforwardly. The website, in fact, I helped someone fill it out yesterday, is fairly easy to understand, to apply for. Initially, some of the questions were around, owner managers that were taking dividends. Were they allowed to apply for it? The answer, of course, was yes. The only problems we've seen with the CERB so far is people getting extra payments. So a lot of concerns initially about the extra payments. We've informed our clients after talking to CRA, you can do one or two things. If you're going to apply for a subsequent period, you can just keep this. And when you apply, they should right the ship. If they don't and they continue to give you extra money, then you can write a check to the government saying this is the repayment of the CERB and send that into CRA. Outside of that, the CERB benefits have gone over relatively well. There are for 16 weeks and they will end in June. The next thing, and we're seeing this right now, is the delays on tax filings of personal tax returns and some of the other related programs like partnerships. Of course, personal tax returns are due at the end of this month, or actually on June 1st. And I just want to make sure there's no one, as I continue, in the waiting to be entered in, and there isn't anyone. Okay, great. So the biggest thing we've learned about, or that we're seeing right now with the deadlines, is that people are thinking, are confusing the requirement to pay. So there's a deferment of paying your personal taxes to 1 September, but there is a deferral on filing. The filing has to happen on 1 June. And if you owe money, though you don't have to pay until 1 September, you certainly will be hit with a failure to file penalty. So there will be penalties if you don't file. So we're urging people to get those documents into us, or if they file themselves, to file themselves before 1 June to avoid those penalties. Of course, if you have a proprietorship or you do business personally, that of course is 15 June for the proprietorship, and of course for the GSTs that accompany those proprietorships. Payments, once again, will be delayed till 1 September with no interest, but you need to file on time or on the new enhanced times of 1 June, or you will have some penalties. The new child tax credit, or child care benefit, and the GST supplements, and the senior OAS top ups are all automatic. We had a lot of clients calling saying, "How do I get this money? What do I have to fill out?" It's all automatic, and as long as you file your tax returns, your income will be assessed automatically, and all these benefits will come out to you. So once again, going back to the point above, is really important to make sure you hit the timelines for filing your tax returns, so that if you're entitled to any of the child care benefits, the GST enhanced credits, or the one-time senior payouts up to $500, you get it. So we can't stress enough the importance of filing. You don't have to pay till 1 September, but let's avoid those late filing penalties if you do owe money. The next was the reduced RIF draws. The Prime Minister announced a few weeks ago that because the fact that the markets were hit pretty hard, and a lot of the retired people had a decrease in value in their retirement funds, that if they had to stay on the same metrics for pulling out money, they'd be drawing into their capital at a much increased rate, and they may end up not having sufficient funds for retirement. So they've reduced or shrunk the amount you have to take out. That, of course, is automatic. You just have to call up your investment advisor or whoever manages your funds, and they will do that for you. It's nothing to do with the taxing authorities. It's more to do with whoever manages your investments and where those investments have rolled over into a RIF. If you don't know what a RIF is, it's because you're not 71 yet, and so you don't really have to worry about it. And then, of course, the bank programs. We've seen all our clients who have asked for some relief from their banks on their personal mortgages or lines of credit or what have you, without a negative comment. All the banks have helped with that, so we haven't seen very many problems with that at all. On the corporate side, that's a little different, but certainly on the personal side, they've all been all worked out very, very well. So that's sort of the summary on the personal programs and kind of what we've seen, how things have gone. And overall, I would say that I think it's gone out relatively smoothly. In fact, I read this week that the government was quite surprised with the amount of people that actually applied for the CERB. It was more than they thought, and it was a lot less than they thought in terms of the emergency wage subsidy at the corporate level. So we'll see how that plays out and what sort of policies do change with that. What I'm going to do now is I'm just going to open it up for any sort of questions. So I'm going to unmute everyone and then open it up for any questions. Hearing no questions, I'm going to continue then to the corporate relief measures and what's going on there, which I think we've certainly had a lot more questions on. Okay, coming back to my presentation, moving on to the corporate programs. As you can see, we have a few more comments around the corporate programs and some of the kind of cautions on them. So the first thing, filing delays and interest relief for some programs. Once again, what gets announced and what gets put into the public media is great, and I think that's really well comprehended. But if you're a corporation and you have some other programs that you're involved with CRA, for example, SHRED or some other sort of investment tax credit programs, those deadlines have not changed. There are some very strict requirements for those. So you need to look at each one of your programs with the government, with CRA, or with Department of Finance, and determine if that specific program has been given some sort of easement on their filing deadlines, because some haven't, and you need to be very careful about that. The BCAP program, we really have no cautionary comments on that. That's the program being run by a BDC for inside Canada internally, and of course Export Development Canada, EDC, if you're doing any sort of export development work. In all circumstances, I think BDC initially was overwhelmed a little bit with the responses. It was a little slow coming out the gate, but all of our experiences with the BCAP program over the last 8 weeks, once they got through The vetting process has been very good. Clients have been getting their money. They have been, BDC, EDC have been very, I'd say, creative with their crediting procedures, so that they're giving people an opportunity to kind of get back on their feet and get back into the fight, so to speak, in terms of joining the economy and carrying on. The CUs, so the wage subsidy and the 10% remittance relief program has been a huge hit. In fact, yesterday I probably got a half a dozen phone calls from clients saying, John, we just got this $170,000 check or this $200,000 check. Is this for real? Can we spend it? Absolutely. That's what the program is for. As long as you met the revenue reduction targets and you filled out your employee and wage subsidy amounts correctly, and I think we dealt with that 2 weeks ago, and it's on our YouTube channel how to fill out those charts. That money is for the company to use to keep going, to pay additional wages, to cover receivables, to inject back into working capital. So great program. Some of the problems, of course, with it is that it is complicated. The spreadsheets are complicated, particularly around affiliated and corporate group structures. And of course, they haven't opened it up for any sort of business owners that were taking dividends. So those don't apply. Unlike the CERB, they haven't opened that up for owners, which is unfortunate. And I'm still hoping that they do change that and make that amendment so that owners who were compensating themselves with dividends prior to March 15th will still be eligible on a go-forward basis if they convert into a salary methodology of compensation. So fingers are crossed on that. That's probably the biggest two issues with the CEWS is the affiliated group rules, and of course owners who weren't on salary prior to March 15th. Outside of that, it's been pretty straightforward. The first amounts have come forward, and I believe today, actually I know, when the Prime Minister announced his morning huddle that this is going to be extended to the end of August. So it's going to be almost 6 months of the CEWS, which I think is really great, because I think the real harsh economic effects of the work stoppage in Canada will really kind of come out at the tail end of Q3 and Q4 when we're going into winter, and there's no more credit. Receivables have to be collected on. I think that's where we're really going to see some suffering in business. I mean, we have suffering today for sure, but I think it'll be much more propagated throughout the economy come this fall, and this is where the CEWS will help. So if you're receiving it and you can afford to hold on to it and build up your cash reserves, great, keep it up. The LEAF, the Large Employer Emergency Financing Facility, which was announced, I believe, on Monday. We have a few clients applying for it. It seems fairly straightforward. It's meant for large employers. I think the paperwork is long, but the numbers are big, so probably justifies that. But we haven't had any negative experiences with it at this point. CEBA, the Canada Emergency Business Account, that was the $40,000. 10,000 of it doesn't have to be paid back. If you pay back the complete amount, interest-free before December 2022. Good program. Some of the issues that we found with were clients that opened up their businesses last year. They were startups in 2019. They hadn't hit kind of those payroll thresholds, even the 25,000. And now they're kind of starting to either grow or just kind of get back at it. They don't get access to this, so that using payroll and the government's idea of that was really about let's get employees back to work is great, but it's not helping startups. It's not helping businesses that maybe don't have payroll. They use contractors, but in the end, those contractors are have employees or are compensating themselves some way. Don't get to receive this, so that's unfortunate for sure. And then, of course, the Canada Emergency Commercial Rent Assistance. I've had, I would say, probably 30 emails or phone calls in the last week about this from both sides, tenants and landlords. The rules are out there. It's not confirmed. There's a lot of problems with this program. If you're going to ask me what I was going to bet on, I don't think it's going to happen. I think if any sort of rent relief comes out, it's going to be drastically different than the initial proposals that were put put down almost 3 weeks ago now and still haven't been finalized. This is the only program that was announced. It's taken 3 weeks to actually get it, get the rules set up. So it's hugely complicated. It's not clear that it's in the interest of both parties, and both parties have to agree on it. So, and it's of course, it's also pushed into contract law. And once you push into contract law, you need to get the lawyers involved, and each party subject to the agreement will have their own lawyer. So there's a whole lot of kind of back end administration that has to get done to even see this the CCRA program get off the ground. So because of that, we think it won't get off the ground. If it does get legislated as it is, we don't think the uptake will be very, very much. And we could go into details of why is that from either the tenant's position or the landlord's position. But it's not clear that I won't say it wasn't well thought out, but in reality, I don't suspect it'll be well taken. I'm going to go back to Zoom to see if there's any questions and open up for some conversations before we continue on to the last part of what we've seen in the market and the way forward. So opening it up to conversation. Anyone have any questions or want to enter the chat group and ask any questions? And I'll give you a couple seconds to jump in.
Tough crowd today, John.
Tough crowd, yeah, tough crowd. It's sunny out here in Edmonton. I assume everyone's in Edmonton. The golf courses are open, so next week maybe we'll go for a couple rounds of golf and get everyone, and we'll spend 3 hours talking about this. Okay, I'm going to continue because I think I have some other things. I know I have some other things I want to share with you. Okay. Going into the last part of the talk, the points I wanted to share, kind of summarizing what we've seen and where we think things are going to go. And it's going to be kind of what I've seen, probably talking to 200-300 corporate clients over the last 8 weeks, and as well as a bunch of personal tax clients. So we've seen a massive, almost Orwellian kind of effort with business owners to restructure, rethink, and I hate to use those kind of terminologies, but really, how are they going to move forward? First, it was panic, then it was fear, and now it's kind of this ruthless discipline of methodology and thought going into the processes. And unfortunately, I won't say unfortunately, but I think a common thread is that most businesses are realizing they can do just as much, or if not more, business or work without as many resources, particularly staff. I think staff are going to be hit hard coming out of this pandemic, because I think business owners are quite worried about capital. They're quite worried about the risk, about their cash flows, and they will ask more from the employees they have to make sure the business is viable, because we don't know what it's going to look like in the fall. I hate to use the term second wave. I'm not a pessimistic guy generally, but I think you need to always plan. So it's prudent. I think most business owners are trying to be extremely prudent and safe right now. So we're seeing more with less, and we're seeing a real kind of rationalization, I guess, of the income statement, and just cost cutting. So if you're a business owner out there, I would say you're not alone, and of course, there's a human toll to that, and I know that's stressing out, and I won't say depressing, but certainly souring the mood amongst a lot of business owners, knowing that the conversations they're going to have with their staff, or even or their laid off staff, about kind of what it's going to look like going into the fall. I would say this: you got to have those conversations sooner than later. There are still legal requirements for severance, and you have to plan that into your cash flow because they're not going to go away, right? So, you're not alone out there realizing that you can do more with less, and of course the domino effects of what that means to your staff and relationships and stuff like that, unfortunately. That goes into employee and wage rationalization, right? I would say over 90% of our clients have asked at least their senior leadership to take wage cuts. The owners themselves have probably in all circumstances taken wage cuts. They've asked their senior leaders to do the same. And we don't think that will come back very quickly. Once again, we don't know what the fall, and I'm not looking, 3 weeks from now, because, with the CUs coming in, people are starting to get back going, right? So it's going to look positive. I think people will see positive uptick in their business next 3 or 4 weeks, but it's about the sustainability in 3 months. So I don't think we'll see wages increasing again. I think, the question is, will Alberta come in line? We all know Alberta wages are generally some of the highest in the country, and that's kind of had a domino effect on a lot of cost inputs. I think you'll see those costs go down. Now, unfortunately, I think a lot of that cost will be eaten up with kind of the PP&E and having to make your business safe, spreading stuff out. In fact, I was talking to a construction client this morning, and the comment was, business is good, we're working, but everything's just a little less efficient because we can't throw a bunch of, people at a problem to solve it. Everyone has to be, distanced out. So everything's taking longer, and you're not completing things in time. And that just adds additional cost, right? Of just of a job going, for extra days or what have you. So you need to prepare for that. Interesting thing around some of the fixed costs. I think marketing, I think I've always said, if you want to grow your business, your marketing should be around that 8 to 10% of top line revenue. And that's a lot of money. But if you want to grow, and maybe your specific industry should be down a little more or up a little bit for other industries. But the point being is you have to commit to marketing. Problem with marketing is you don't know what works, right? You have to try things and you have to consistently try them. And, the results are very hard to measure sometimes. But I think you need to have a coherent, and we're seeing clients actually spend a significant amount of money on marketing, and to get the coherent message out, their value proposition out. I think before you cut, because marketing is always one of those things you cut first. In this circumstance, I would say drop the pen. I think it's better to really think about where you should put those marketing dollars and try to keep some dollars in marketing to really spread the value proposition, get your name out there. This is not the time not to be out there. IT is becoming a bigger and bigger spend for almost every business, regardless of their industry, if they were IT heavy or not. IT is a significant business process now with every company, whether it's things like this, Zoom, or just getting your people working mobily or at their homes, allowing your customers to communicate to you. IT is going to be a huge spend. Prepare for it. Build those relationships. You need to learn to understand it and how it can be used in your business, because if you don't, you will not win. Rent's going to be an interesting play going forward, right? There's going to be a certain element, I think, of businesses out there that we're seeing from our client base that they don't need as much space. And what does that mean for their leases? What does that mean for their operations? And then the negotiations with their landlords. I think it's going to be really, really important to assess that. And alternatively, there are going to be some of our clients we've already discussed with them, whereas, when they bring everyone back, or if they want to maintain the social distance and have everyone operate at work safely, they actually need more space because, the bullpens, those kind of close quarter with no shields, kind of common area desk situations may not work. So you need to figure out that piece, and you need to figure it out sooner or later. And if you don't need as much space, so what? I mean, how are you going to get out of that lease? How are you going to figure that piece out? Because it's an expensive part of the income statement. And the sooner you can get that off, if you don't need it, the better. And I don't think the rent subsidy, like I said earlier, the rent subsidy, if you're down 70%, rent's probably not your biggest concern, and that's the only way right now you qualify for the proposed commercial rent subsidy. I think there's going to be a lot of opportunities for acquisitions. If you can sort out your income statement, you can get your business kind of into the point where it's profitable and you have excess cash. There's going to be, I think, throughout industry, throughout the commercial sector, there's going to be opportunity to acquire your competitors, acquire people who just want out. So they always, I don't know if it was Warren Buffett, but, and I'm not necessarily talking about investing in the markets, but when people run away, you run towards the fire, you might get burnt, or B, you're going to win. So and I think it's taken a mind frame, and our business clients that are more positive are seeing those opportunities because they're out there. So I would really, encourage you to sometimes look past the fray and look for those opportunities because they're out there. Cash is king. I know it's a mantra, you learned in Business 101, but continue to watch your cash, continue to engage with the banks. Your banks are your friends, they're not your enemies. If you don't communicate with them, they can't help you. Too many business owners, and we try to, I won't say beat out of our clients, but certainly stress it and have them reflect on that communication piece with the bankers. The more you talk to them, the more they understand your position. They're going to get the bad news if there is bad news anyways, so you might as well frame it in the most positive fashion possible. So continue the communication with your bankers. We've had some conversations with clients around the $40,000 loan. Oh, I don't need it. Well, if you qualify, if you meet the criteria for it, take it. You can always just pay it back, but take the cash. The cash will be king to float the boat when the tide is going out. Okay, so that was a kind of a quick summary of where we're seeing things right now. I would like to open it up to any questions or comments. Outside of that, I really don't have much else to talk about this week. I just kind of wanted to give you a good 30-minute chat about, the programs that are working, the programs we don't think are working, the problems our clients have had, the problems we've seen, how we've resolved them, and sort of the way forward with business. So I'll open it up.
Thanks, John. Do you think that there's a drop dead date where the government will cancel this CIRSA thing?
I think, well, they said they would have it out by mid to end May. You're hearing nothing on it right now. My relationships, both at CRA and finance, have said that it's a tough nut to crack because you have to negotiate with each province. The metrics are being disputed. I mean, the reality is, if you're down 70%, what landlord's going to want to kind of waive any sort of kind of legal right it has in its lease to try to get as much money out of you as possible if you're going to fail. So I think they're going to get rid of it with an announcement of something else that could be used to help small businesses get going, is what I think is going to happen.
If you had that pen, what would you write it out as?
If I had that pen, and I said this to the MP 8 weeks ago, I would have all businesses. I'd open up to almost any business operating in Canada. I would factor receivables to CRA. So if you want business to get going, and you want cash inside businesses. So what I mean by factoring the receivables is, you have receivables under 90 days, you go to your accountant, he signs off that they're legit, and you send those receivables to the government of Canada with the business numbers of those companies. They write you a check and they go collect. So then now you have an environment where your receivables are good. You gotten the cash and you have the working capital flowing, and away you go. That doesn't necessarily directly deal with the rent, but indirectly it deals with cash flow, which is rent. I would then, and then the only other pen I would stroke would be saying that the commercial banks can't forfeit any loans that have businesses in it, and so the landlords now are not stressed on their personal guarantees or losing their house. Or I know there's a belief that everyone that owns commercial property is excessively wealthy, but the reality is most of them are probably leveraged small business owners that have taken a swing at trying to get a little bit of land. So once you take off the table that personal guarantees and those mortgages are going to be called, then a landlord will negotiate, right? Then they'll say, okay, what can you give me? And then the landlord and the business owner can negotiate as they ought to negotiate without government interfering in some sort of program. You both have to sign on. You're liable that what they say is true, and all those other. Just let the commercial transaction and communication between landlord and business owner happen naturally, and it'll happen a lot easier. If you make sure that the business owner has, cleared up cash flow, and they know they're getting the receivables paid off, and two, the landlord knows that his house isn't going to be taken away from him because he hasn't made his rent check. Because the reality is, most banks have waived interest on commercial property for 3 months, but August is coming pretty darn quickly, and you're going to have to pay all that principal back. So it's a huge number in September for landlords. So landlords are saying, how am I going to survive this if I'm not getting any rent?
It's a good answer.
So that's what I would do. And I've had this conversation with other people in the comments. Well, how can we trust that the CPA would sign off on receivables? I would say any CPA that signs off on receivables that they're good and they're not loses their designation, right? Like push it to the professionals to actually have to act like professionals, and their whole careers in the line, and they will secure the system and get cash moving out. I think that's the key. But yeah, I don't know if that will ever happen. But I don't think any business owner that's hoping that the commercial rent relief program is going to be their savior, I think is going to be sadly disappointed, and they've misplaced their trust.
Thanks, John.
Any other comments? Okay, guys. Well, hopefully you enjoyed that. I know it wasn't that long. We didn't have our, tete-a-tete, as we say, with Eric, but he'll be back next week. And hopefully we'll have some more things to kind of go through. If you do have questions and you want to answer them, you want to ask them in advance, or you want us to talk about something, I'm just going to type my email, and I think most of you have it, but I will type my email in the chat, and just email me, and I'll bring those questions to the chat next week. Otherwise, have a great long weekend. It's sunny out. I can get some golf and get some fresh air. Take care. Have a great weekend.